Go.
Welcome to the May 15th, 2017 Advance Report from McGowanGroup Asset Management clients. I'm Spencer McGowan, host of NetWorth Radio. Thank you so much for joining us today for the Advance Report, the best in financial news with portfolio strategy. And top financial headlines of the week include the QQQ NASDAQ 100 index hitting an all-time high. There's a financial lesson built in. That all-time high was concurrent with an amazing rally in Apple, which took them to the largest market cap in financial history, $800 billion. You can see turbocharged right here. And the QQQ's approaching 140 this week. But the lesson is this. Back in the year 2000, the QQQ index hit 120, fell by nearly 80%. It's taken 16 years to make a new high, and it is not even 20% above the high of 2000. So don't get sucked in. And by the way, the NASDAQ 100 has changed because it's the top 100 companies by market capitalization. It has shifted dramatically since the 2000 high. High yield index. This is also one of the big stories. You can see back here, the high yield index in February of 2016 was the lowest discount to par value that we have seen since the U.S. banking system was rendered insolvent back in the financial crisis. What a buying opportunity in retrospect. That index now delivering great returns at 88 cents on the dollar instead of 75% of par. But here's your lesson on this particular chart. Equilibrium is about 95. Why? The default rate in corporate B-rated paper is 2 to 5%. And that's why you see the adjustment to equilibrium at 95. In a recession, the default rate goes to 10%, but you can see pessimism when the Dow was 15,500, now it's 21,000, the high yield index got smacked. And by the way, high yield bonds, according to Leah Modigliani, noted analyst, are the best risk-adjusted return when compared with the S&P 500. Now, crude oil. Could it be that deregulation is deflationary and the growth with inflation premise, at least temporarily, is rendered incorrect? When we start to see the collapse in crude prices, well, one of the things that happens, this is the commodity index, you can see the crude right here. We collapsed recently from a high of about 54 down to as low as $45 a barrel. It appears that the U.S. production has replaced about half of what OPEC said they were going to cut back. The Russians and, of course, Saudi Arabia said we're going to cut back production by about 1.3 million barrels a day. Why is that significant? Well, the U.S. has added over 550,000 barrels a day, according to the most recent Bloomberg report. In essence, right now, as we speak, they've probably replaced half of what OPEC pledged to cut back. Wow, shale revolution, and it's deflationary. T-bills. That's an upward trend. You can see T-bills at near zero back here. This is 2015. Wow, what a spike. This is Janet Yellen raising the Fed funds rate. And as she raises that rate, she's at 3/4 base rate. Why does a T-bill follow it? Bank reserve arbitrage. If Bank of Alex, for example, loans money to Bank of Spencer, the Fed says it needs to be between 3/4 and 1%. Otherwise, Alex will just go buy T-bills. And that's why the arbitrage follows this. But look at this. It's not 3/4, which is the current target rate. It's 0.875. That would be bond traders believing that Janet Yellen won't go 0.25%, but at the next Fed meeting, it's going to be 1/8%. Now, let's look at what happened to the 30-year Treasury. Not all rates moved together. Wow, the 30-year Treasury actually settled back down. Post-election high, about 3.2% on the 30-year Treasury. You can see this thing compressing, flattening. And what's intriguing is this equilibrium around 3%. Our hypothesis here is that pension plans have benchmarks for their actuarial returns, and they want 3%. They seem to like it. You can see it right here. And what does it mean? Anything that pays 6% or better may have extraordinary value in this market. Thank you for joining us for this week's Advance Report. Don't forget to go to networthradio.com, click on Meet the Team, come down to the Crescent, and meet the team that cares. McGowanGroup Asset Management. I'm Spencer McGowan, and may God bless you and your family in the week ahead with peace and prosperity.